All right, guys, we are here for the market close. Very last minute. I did not know y'all were going to be waiting for the market close, so I really do appreciate you tuning in. Yeah, you know what? The man in the cape did tell me that I saw the bat signal, I saw the Ahmed signal up there, and someone had to answer the call. So I'm going to be here to entertain you guys. I mean, hopefully Ahmed can start something up. He's probably doing something crazy right now. I'm really not really sure. Maybe have a debt appointment, whatever it is. We will see. But we are here for the market close. The market is literally going to close in like just 1 minute over here. So I want to set up a clip here. I'm going to also hold on a second. Oh, shoot. We got like 15 seconds over here. All right, let's get this started on the road. All right, let me bring up the cues now because that's obviously the thing that everyone's looking at. Let's get the market close on the road real quick. 1 second. Oh, we got one. The market is now closed. Now, if you'll excuse me for 1 minute, I am going to go ahead. I got to do the ritual, guys. I got to do the ritual. All right, hold on. Oh, shoot. He did. I got to go back here. Here we go. Hold on. Whoa. Where is this clip? I'm trying to look for the clip. Okay. I should literally save this clip on the side because every single time I do this, I never save the clip on the side. All right. Well, anyways, the market is closed. I'll be able to find the clip. Appreciate you guys for joining in. Very last minute. I really do appreciate it. I thought maybe it's a good idea to entertain you all before the weekend goes. We did close green on the day. Fortunately, over here we got SPY closed 72 basis points up. I mean, this was like a roller coaster all day today. In fact, I did wake up a little bit late today, so I did miss the action in the morning. Had a little bit of scare over there. We have since then recovered quite a tremendous amount since then. From that bottom in the morning, we literally went up about 1% on the SPY. The Qs, I did not realize the Qs dropped down all the way here at 599. Like that's crazy. 599 the Qs just this morning. Microsoft was actually falling off a cliff all day long. Actually, no, it basically is still down there. But, NVIDIA is up today, which is good news. They got earnings reporting on Wednesday happening. Netflix actually closed up 2% today. Congratulations to everyone who called the bottom of that one. Also, the dip buyers on Google. Google's up 4% today. I got to be honest, the news that I saw today that had to do with Google actually came out after they spiked up 4% today. But I'd imagine it has something to do, or the continual momentum has something to do with the backstop with the $100 million funding they're going to do for Fluidstack. Clearly, we had the other side of this data center news happening today. If I scroll down here to the data center plays, Nebius is down like 9% today. Wolf is down 3% today. Iron's down 8% today. Almost closed under the 40s again, but it did not. We did get the news from CoreWeave. Actually, this did recover pretty considerably since the lows in the middle of the day. It recovered like about 6% today. Cypher's down about 7% today. Applied Digital, which is one of the contractors for CoreWeave, is down 8% today. So this is really hurting the entire data center sector. And I've really told you guys, I say this many times, look, when you get these crazy data center moves to the upside, like out of nowhere, like if I look at Nebius over here, like don't chase this candle, right? And arguably, you could have not chased this candle, and then you could buy over here after it pulls back. But kind of buy the pullback when it comes to a lot of these data center stocks. Don't necessarily chase it, right? Because it does make these crazy zigzag moves. And don't feel FOMO thinking that, hey, it's never going to come back down or anything, because it usually does. But if you're going to buy, and if you really want to buy the dip pretty hard, like this would be the time when you want to buy the dip if you think this move is going to continue the upside. For me personally, I'm not going to add here. I already have my Nebius position, as you guys already know about that one. A lot of these after hours moves are pretty low liquid, so I wouldn't really pay attention to this. Down 1% over here. Oklo is down another 5-6%. Nature is healing. SMR is down 8%. Nature is healing once again. VG is down 2%. Nature is not healing there. ASTS is down 7%. I'd imagine this has to do with the recent interview that Sam Altman had. But it's been really falling off a cliff basically the whole day. Lemonade is down 7% today. I was actually supposed to talk with Tanner yesterday on the whole Lemonade stuff regarding the earnings. The earnings were obviously really good. It had its best earnings that it's ever had. And still, it had this sell off. You tuned into the solid report yesterday. I did discuss this for a minute, but basically, from those earnings highs pre-market yesterday, it basically is down 26%, which is a crazy move to do. I'm no longer in Lemonade. I already said that on Twitter. I sold out of Lemonade at $75 to buy into a couple of semiconductor stocks. And if you look at the entire board, look, semiconductor is up 1% today. IGV is down 1.27%. So that divergence between semiconductors and also software is continue to happen. If I take a look here at the S&P 500 sectors, I have this ratio over here, this ratio that I follow, not pretty closely, but just looking at the trend from a long-term perspective. You have this ratio of IGV over SOX. So it's basically the performance of IGV relative to semiconductors, and it's just constant downtrend here. Now, we did have a little bit of a bounce the other day, but like, look, it just sold it off, right? So if you look at SOX, it's up and to the right. If you look at IGV, it's down and to the right. So it's not, the market is kind of tell you where it's positioning right now. It is not positioning in software right now. It is positioning in semiconductors. The whole day, SanDisk was green. The whole day. It didn't flinch once the whole day. Actually, hold on a second here. So it's up 28. Actually, it was not up the whole day, but it did. I believe it gapped down for a minute. If I look over here at the close yesterday, yeah, it gapped down for a minute, but obviously it just got bought up as soon as the market opened and has not looked back since. Micron, not as strong as SanDisk. It's only up 3%, today. I mean, can you believe that? Oracle is down about 6% today. So here's the reason why that Oracle is down 6% today. Here's the reason why. CoreWeave is down today. Here's the reason why all these data center stocks are down today. It's because Blue Owl is a funder, is a company that funds for a lot of venture funds, a lot of private equity, a lot of public companies. They were not able to secure the $4 billion funding for CoreWeave to build the data centers. So that hit everything. But if you really look under the surface, if you have like a Bloomberg or something, you'll be able to see the credit spreads for insuring against your bonds for CoreWeave. And the bond yields for CoreWeave went through the roof, meaning that no one really wants to buy them. They're very high risk. So if you look at what this is going to impact, this is going to impact your data center stocks. This is going to impact your Oracles and everything that's basically has high reliance on building data centers that CoreWeave is building. But more importantly, OpenAI, right? Because OpenAI's largest customer, or they're the largest customer for CoreWeave. So if CoreWeave goes down, they're not able to catch up with all of the progress that OpenAI is doing. Then that comes into question again: is OpenAI able to cover all of the revenue they're promising to pay all these companies, AMD, Oracle, Microsoft, and so on? So if I look over here, was Broadcom up today? Broadcom is down today, even though the semiconductors were up. Broadcom does have OpenAI revenue. Microsoft has a lot of OpenAI revenue, so that probably explains the reason why Microsoft is down today. Oracle, like we know, a lot of that RPO is from OpenAI, right? So this is the reason why all of these OpenAI impacted companies are down today, because of this reason, right? So it's something it's still a risk. It's still a risk to the market. It's still a risk to a lot of the credit spreads, again, that's insuring against the bonds people are taking out or giving to or loaning money to CoreWeave. And that is having that cascading effect to basically impact these other companies, right? So anything that touches OpenAI is pretty much down today. Guess what doesn't touch OpenAI? Google. Google does not touch OpenAI, right? So I'm actually looking at it over here on the charts, but I did want to play a clip from CNBC, but I'm a little distracted here, but I really want to play the clip of the market close because y'all need the bell, and I have to do the bell for you guys. Anybody got the exact timestamp for when Amit did the bell yesterday, just so I can play the bell for you all, because that's like a ritual, and I don't got a bell over here, and I ain't gonna steal his thunder. So I'm just like, look at this. I'm gonna go ahead and play a clip from CNBC in the meantime, so they could talk about this Oracle nonsense. I'm sorry, this CoreWeave nonsense. This is all going to be in the past later on because they're going to get the funding if they really need it. You have all these companies investing in OpenAI. They don't want OpenAI to fail, right? So if OpenAI fails, these companies won't fail. Like Amazon's not going to fail, Microsoft's not going to fail, whatever, but they're going to get hit pretty hard. So it's in everyone's best interest to keep the OpenAI music playing so we can all continue to play musical chairs. So we have a little bit of a coverage here regarding the Blue Owl Capital incident from CNBC. I'm going to go ahead and play this for you all. And in the meantime, I'm going to go try.
You can see it and other alternative asset managers stocks have been under pressure. This certainly was the case yesterday after the firm said it would halt quarterly redemptions in its retail-focused debt fund, opting instead to return capital via episodic payouts, as it did sell down $1.4 billion of assets to allow for that. The move did reignite concerns around liquidity and valuation for many private credit vehicles. Joining us now in a CNBC exclusive is Blue Owl Capital co-president and the head of credit as well, Craig Packer. Craig, good to have you here. Thank you for being here.
Great,
as well.
Thanks for having me.
Want to start off with the $1.4 billion because today's story, or the focus on Blue Owl now, has been around the sale itself. And I guess my first question would simply be, did you sell a cross-section of loans from across Blue Owl? So, you know, whatever percent of this and this and this, whether sector or companies, or was it you cherry picking the loans that were a particular, value, and therefore you could sell at what was 99.7 cents on the dollar?
Yeah, no, thanks for having me, and thanks for the opportunity to clear it up, because I think there was a lot of confusion, in part because the headline said we were halting redemptions. We're not halting redemptions, just changing the form, and if anything, we're accelerating redemptions. But to your question,
yes,
we sold $1.4 billion across 128 names in the portfolio. It represented a cross-section of about half the book, generally consistent with all of our industry sectors, all the types of loans that we make, and we sold them at par. Fair value, 99.7. I think most in the industry that follow this say the ability for us to sell that size at these prices is actually a validation of value. And people have been asking questions about marks, and here we are with significant third-party sales at par.
So again, right, to that point, then you would argue this is a reflection of the overall credit quality of the portfolio, not you selling what you knew you could sell.
We had ample demand for these names. We certainly, as you know, this particular transaction is a result of us calling off a merger of one of our smaller funds. In November, I was here.
I
said we have a number of options. We're going to come back relatively quickly and outline those options. This fund originally was raised about 9 years ago. The plan was either to IPO it, merge it. We tried to merge it, wasn't the right time. Or the third option was to return the capital to investors. We wanted to accelerate the return of capital to investors, so we opportunistically chose to sell a fairly sizable chunk. It's about 35% of the fund, OBDC2, and instead of doing a 5% pro rata tender for investors, where they have to choose whether to sell or not, and it can place investors that don't tender in a disadvantaged position. We said if a fund is more in a return of capital mode, it's much wiser to do it pro rata, but also, and this just wasn't picked up, we're returning 30% of the capital, 6 times the amount that we would have otherwise been doing.
Understood. I want to get to this question around gating, but let me finish on the sort of the loan portfolio if I can. Because you did sell some of them to a wholly owned subsidiary, an insurer you own, and that has also raised questions as to why you would do that, because it does, again, you're like, well, why did they need to sell it to them?
Yeah, so look, I really appreciate the chance to be here. We don't own an insurance company. It's not a subsidiary.
Okay, so this is the problem here. He's under the spotlight, all right? They're putting him under the magnifying glass. They have the sun. Someone's taking the magnifying glass and putting it right on the head of credit for Blue Owl, okay? That uncertainty is really enough to bring down the stock. Now, another thing that I shared on Twitter earlier is this. So let me actually share this tab. I'm going to go to it. Now, excuse me, guys. I did pull this somewhat last minute. I did just post this. So if you look over here, for any dip buyers on Blue Owl, the 8% dividend might not be as attractive once you realize the payout ratio is above 100%. So someone said to me today, look, the dividend yield for Blue Owl is 8%. Could it be a buy right now? The payout ratio is above 100%. Okay. So let's say hypothetically the price of Blue Owl stays where it is at right now. Shareholders get upset. They don't make as much money in order to achieve this payout. If they can't achieve the payout, what do you think they're going to do? They're either going to raise debt, which is not going to be good for the stock, or they're going to cut the dividend or suspend the dividend. That is never good for a company. And arguably, this dividend yield is 7% because the stock has basically fallen off a cliff for a long time. If I go to the Seeking Alpha over here and I look up Blue Owl, and I go to year to date, Blue Owl is down 27% year to date. On the 6 month, it's down 41%. And on the 1 year, it's down about 53%. So this is actually like a 3% dividend, like max 3% dividend. But your shareholder return has been catastrophic here. So ask yourself this question. Do you want to own Blue Owl? I think this also goes with realty income, where people had a little bit of fear as far as realty income goes, which actually has served people quite well. The stock is up 17% year to date. And for a real estate REIT, real estate investment trust company, dividend payer, whatever, that's a massive move for a company. And arguably it's because things are moving into defensives. And I'll give my opinion on where I think Mark's going to go a little bit later on to the show. But it took a long time for this to happen. Like if you kept on thinking it was the bottom for realty income, you'd have to DCA in order to not officially call the bottom. And then you probably did fine over time because you got the dividend, the stock appreciated, and so on. But if you thought like this was the bottom and you went in hard, you basically just got break even. And yes, you got the dividend stuff. And I know people say, hey, we're not going to buy this company for a dividend. We're not buying this company for the appreciation, buy for the dividend. Okay, then that makes sense, right? But this company's dividend that it has over here, its payout ratio is 75%, right? Which is still a little high, but arguably it's always been this high for all realty income. Now let's look at SLG, and I'm not knocking on SLG, okay, but it has gotten hit pretty hard since the beginning year to date, 17%. And it isn't just SLG Realty. I think it was basically since Mandani got elected as mayor. A lot of these New York real estate companies have gotten pretty hard. Like Alexandria Real Estate has gotten pretty hard since Mandani got voted. A few other real estate companies, SLG, which is a very popular one that a lot of people do follow, got hit pretty hard. And this is actually pretty interesting. So their dividend, Alexandria Real Estate Equities, their payout ratio is 45%. So this isn't like something as fearful as getting your payout reduced, right? Or getting your dividend reduced. They are at a 5% dividend. I think originally it's supposed to be like 3-4% dividend, but the payout ratio is only 45%. So it's like not as big of a deal. But again, when you look at Blue Owl, man, their payout ratio is 107%. Like I'm not saying that they're going to cut the dividend, but if the thesis is the dividend in this company, and they don't pay out that dividend, it might turn into a Disney, okay? Disney cut its dividend when COVID happened because they couldn't afford it. And a lot of other stocks cut their dividend. And since then, they've recovered, like the Carnival Cruises, the Norwegian cruise lines, the RCLs or Royal Caribbean lines. They cut their dividends or they reduced their dividends because they couldn't afford it because they needed to pay down all this debt that they had, right? But since then, of course, they recovered, but it didn't happen overnight. It didn't happen overnight for these stocks. And, shout out to Chris Patel because he was able to catch the bottom in a lot of these stocks. But the bottoming process for these since COVID took a long time. It basically started bottoming out here in like the single dollar range for like a year. And then it started going up, but like it didn't really recover. It's actually pre-COVID was like in the $60 for Norwegian cruise lines. Yeah, $50 for it. And it hasn't even recovered yet, right? So maybe you're started collecting the dividend again lately. Actually, they're paying out a small dividend, but like it's not anything as dramatic as it used to be before, which is the reason why a lot of people own cruise lines. So I would say is word of caution when it comes to Blue Owl. Look, they're going to have a lot of debt they need to pay off, and they will probably stop the dividend if this massacre still continues to happen. So we will see. Just look at their chat. Rubric thought I'd buy more. All right, so let's get a little bit into the cybersecurity incident, the reason why cybersecurity stocks are down a lot today. So let me go ahead and bring up the trading view real quick. And if I take a look over here at the cybersecurity basket, they all like literally got hit today. All right. CrowdStrike down 8% today. Like that's wild. And CrowdStrike is still an expensive stock. Even after this major drawdown, it is still an expensive stock, right? It's been in a massive downtrend ever since all of software basically topped out in November, right? So if you go over here, you look at Fortinet, Fortinet's a bit of a different company, legacy software. Legacy hardware when it comes to firewalls. Okta dropped a lot today. Palo Alto basically topped out last November, last October. Rubrik kind of topped out after the most recent earnings that they had. They're supposed to be having earnings coming up on March 12, Thursday. So that's going to be an interesting one to watch as well. Zscaler basically topped out in November. A lot of these cybersecurity stocks, as in addition to software stocks, have basically topped out since last November. And you had that second push down today, a massive push down. If you take a look at the volume over here, the volume was pretty high today. Today's volume on CrowdStrike was mostly selling. And this is the highest volume we had on CrowdStrike in a single day since last September. So with that volume, the market is kind of telling you something. It's kind of telling you something to probably not call this a bottom, right? Rubrik, Zscaler, it wasn't the highest volume that they had in a long time. Rubrik, not the highest volume, so maybe it wasn't as dramatic, but this definitely targeted CrowdStrike, and this definitely targeted Cloudflare. Obviously, Cloudflare had their higher volume when they had their earnings, and they were a beneficiary, or they still are a beneficiary of cloud edge computing, DigitalOcean as well. But you do have a bit of the security layer with Cloudflare. Okay, so Cloudflare basically is a DNS protector of the entire internet. And when you have a company like Anthropic come out with code security from the Claude perspective, let me bring that up over here. Actually, let me just play this clip for you guys real quick so you can take a look at it. All right, so we don't need to see too much of that one. Basically, they came out with Anthropic Cloud security. All right, here it is. So Claude Code Security, AI-driven tool powered by its Opus model that can autonomously review entire code bases and surface high security or high severity vulnerabilities, expanding deeper into enterprise security workflows alongside platforms like Cloudflare, CrowdStrike, Palo Alto, and Microsoft Defender. I would say that this is probably part of the reason why Microsoft was down a lot today, why it didn't necessarily recover not the entire market, but at least the mega caps were in a bit of a recovery today. So if I go back to the trading view over here and I bring up the Qs, obviously the Qs were up today pretty nicely and decent volume today on this up candle. But Microsoft is still, it's red in the day. And even as the market did propel higher, the market kind of did bottom out this morning, right around the time the market opened, before the market opened. And so did Microsoft. But Microsoft basically gave up all of its gains throughout the entire day. And even after it bounced, it wasn't even up that much. It was up like 0.5%. And so when you think about this, Microsoft has a security package that's very similar to CrowdStrike for their front endpoint or XDR, EDR, endpoint detection response called Microsoft Defender. I wouldn't say they're so much impacted by this because obviously they make a lot of money off other channels in their company, but this does affect the priceability as far as the bundling goes when attaching Microsoft Defender under there, because I guess the fear here is that maybe we won't need so much security if we have Anthropic scanning our code using AI and all this stuff. And ultimately, whatever you push out to production is going to come from code that you push out for your applications. And if it's scanning it on the code level, then that means that you're not going to push out any vulnerabilities, which can be exploited by hackers and viruses and so on. Yeah, I mean, it is a bit overblown. To be honest, I think I would attribute this to FUD. I think the velocity of the sell-off that's happening with software, and also today you saw cybersecurity, and I've always been a very bullish person whenever it comes to cybersecurity. Like, think of the long-term perspective of how important cybersecurity is going to be for all of your data and all of your applications and your entire network as things start to evolve very quickly, as compute and data transfers across different channels very rapidly and at high magnitudes, right? Like think you have like 1,000 packets traveling around your house all day long. As you start to use more queries, as these applications and AI agents start to run a lot more, those thousands become 10,000s. And someone needs to monitor all of that, right? And that's where CrowdStrike comes in. That's where Microsoft Defender comes in. That's where Palo Alto comes in, and Zscaler and all these other companies, and Cloudflare especially, as they guard the internet from DNS attacks and whatever it is. That's where these guys come in. And the fear is that you have Anthropic Claude instilling code security, which is going to deem all of this security that we have in place today, all these companies that are able to turn a profit from a free cash flow perspective or profitability from a bottom line perspective, is false. We don't need it anymore, because now I can vibe code my way into protecting trillion-dollar enterprises. That doesn't make sense to me. Now, what makes a bit sense to me is not so much the velocity of the sell-off, but also the return to more reasonable valuations when it comes to a lot of these companies. 1 second, hold on. All right, so one thing that makes a bit more sense when it comes to this is, let's take a look at CrowdStrike's valuation. All right. Even after this sell-off, CrowdStrike is selling, I think this is more like 17, 18 times forward EV sales. Enterprise value is basically the market cap, and you subtract the net cash they have for their company, right? So in this case, CrowdStrike has $5 billion of cash under their tool belt. They have $800 million in debt. So you subtract $4 billion from this, and then you divide that by their revenue that they expect to realize in the next 12 months. So if we look at the CrowdStrike earnings report for last quarter, actually, you know what? I'm going to go to Fiscal AI and do it because it's a lot easier. If we go to, oh, no, that didn't do it. If we go to the estimates for revenue for the next 12 months, so then that would be the revenue ending, or the revenue ending in January 2027. We have here that the mean is about $5.9 billion. And right now they're trading at an enterprise value, after subtract the cash, they're trading at enterprise value of about $102 billion. So if I do 102 divided by 5.9, that puts them at about, 17 times forward price to sales. So this actually needs to be updated, because I don't think they're capturing what their forward revenue actually is as far as the estimates go. And they have to beat those estimates for the revenue in order to qualify for this valuation. Arguably, though, this is actually a pretty expensive value. Oh, I'm sharing this tab. This is arguably pretty expensive to pay for CrowdStrike. It's actually a 17 times. So let me go back to Fiscal AI over here, and let me take a look at their ratios. I'm going to go to their forward valuation, price, forward EV sales. It's going to give me it in a chart. And if I take a look at this big chart over here, they're around 18 times, probably a little bit less, 17 times. They're still pretty expensive. If I open up the median that they usually trade at, they are less than the median. But to be completely honest, they've been hovering over this median for a long time. I think we can exclude 2021 from here, because that's so long ago and everything was overvalued back then. So if I exclude that, let me go back to, let me go to 22, and let me switch to quarterly. Okay. So quarterly, I'd switch it. Let me take that one out of there. All right. So the median would actually be less than where it's trading at right now, around 16 times. This was probably the opportunistic time to buy CrowdStrike. After that outage happened and everyone thought CrowdStrike was going to go to zero, they thought Sentinel-1 was going to come and eat CrowdStrike's lunch. They thought Palo Alto was going to eat CrowdStrike's lunch. That was the time to buy CrowdStrike. This was obviously not the time to buy CrowdStrike. You never chase all-time highs if you're looking to invest for a long time. I mean, you can, but not in size, just DCA in. and it's still trading above its median since January 2022, right? So it's the valuation is still pretty up there, considering you had all of 2023 to buy CrowdStrike when it was less than $200, and then reap the upside there. And the stock does get cheaper if the price stays stagnant. The stock does get cheaper as each quarter comes in, but it's really not enough to make the valuation cheaper. If we look at Palo Alto. Actually, I do have a table over here that's going to show cybersecurity. So forward EV sales for Rubrik is at 6.5, because if you take out the amount of money they have in cash, subtract it from the market cap, and then take their revenue growth for Ford, I forget exactly how much it is, but it's probably like $1.4 billion divided. They're trading at 6.5 right now, which is a lot more attractive when they're at around 12. And the free cash flow margin is 21%. CrowdStrike I have over here is 17 times. Why does it say 17 times over here? It doesn't say it over there. Anyway, 17 times is a bit more accurate. And their forward revenue growth is actually, I think it's like around 21%. Hold on. Revenue forward 1 year CAGR. Perfect. It doesn't have it there. That's great. That just makes me look great. But oh, there you go. Good. So I guess I look a lot better now. Yeah. So Rubrik is 44%. SentinelOne, guys, this is I say this so many times when it comes to SentinelOne. You don't want to buy SentinelOne because you think the company is going to go back to $30. You buy it because you think it's going to get acquired. Okay. Because if the company doesn't get acquired, the stock's going to stay down here. That is really your only escape. That is your only bull case when it comes to SentinelOne. Like, they're not going to flip the script out of nowhere. They haven't been able to flip their script for years. They're not going to do it out of nowhere. Zscaler is at 7.2, secondary leader when it comes to network security. Palo Alto is probably the leader when it comes to, not probably, they are the leader when it comes to network security. And they're trading at 9.4. So the valuation for Palo Alto is a lot more attractive at 148. It didn't really take that much of a hit today, and it's probably because they already took a massive hit from their earnings. They're down about 1.5% today. So they didn't see that as much drawdown. But if I look at the Palo Alto chart over here, then yeah, they kind of pulled back a little bit from today's highs, right? So if I go all the way down here, they pulled back about 6%, which is a pretty nasty move. So yeah, they did give a lot of that back, but arguably they're doing pretty well today before that happened. But the real haymaker was on CrowdStrike, and they dropped like 10% intraday. Actually, as a matter of fact, yesterday's close, yeah, they actually were about flat all day long. Someone always knows something. What do you think the valuation of Okta should be at? Well, let's go ahead and look at the fiscal AI over here. Let me change my chart over here. I'm not going to do this stream for long. We're just going to do it for maybe like 15 more minutes over here. We have Okta. Let me just add Okta over here. So Okta is another company that its margins are a lot better than SentinelOne. SentinelOne's at 7% free cash flow margins after being public for so long. Can you really believe that? But they're not growing as fast as SentinelOne. They're growing at 12%. 32% free cash flow margins, and their forward CAGR is 11%. They're trading at 4 times forward EV sales. Like this is like, so when it comes to identity and access management, basically identity security for all of your networks and enterprises and everything, CyberArk is a leader, and Palo Alto is acquiring CyberArk, right? So Palo Alto continues to be the dominant leader when it comes to ruling the entire platform for cybersecurity. Minus Rubrik. Rubrik is data security. So Palo Alto isn't 100% there yet. They do backups, but not as good as Rubrik does. When it comes to Okta, I guess the going case for Okta was an acquisition to help bring the valuation back. But being at this stage, because they've been around for a long time, being at this stage, and do they have an operating profit here? I mean, yeah, they're at like, their operating margins are minus 13%. That's pretty bad, considering that at this point, in terms of their lifespan, they should already be profitable from an operating basis, right? So on operating margin, they're at 3% actually on a quarterly basis. So that was just the annualized one, but they're doing better. But I don't think they're doing good enough given how bullish the market is and how good the entire environment is. Gross profit margins are pretty up there because software does tend to have high gross margins. But on the bottom line, their basic EPS, are they a profitable company? Oh, interesting. How are their margins for operating income positive? But they probably have some crazy stuff going on here with the interest. This is the only reason why I put more focus onto operating income or EBITs or earnings before interest and taxes, because you can have these interest and taxes adjustments here that can make you profitable, right? And we want to dilute that noise and just look at the profitability of the business. So from the business perspective, they are a profitable business here, but by a very low margin. And considering that they've been around and public for about more than 10 years, how's the operating profit back then? Like, they haven't really gone anywhere. Like, is this really the company you want to own for the long term when they've basically just been trading flat as far as the valuation goes for a long time? You want to see re-rating upward and get that premium. That's the reason why CrowdStrike is so expensive, because they constantly expand profitability, and the same thing with Palo Alto as well, right? So that is my take on Okta. SentinelOne, the best out of all cyber names. Their numbers have improved exponentially since when. I mean, what numbers though? Like maybe revenue. Yeah, the revenue did increase a lot. And I'm not trying to attack SentinelOne. I'm just giving you my perspective. So, if you're bullish SentinelOne, by all means, be bullish SentinelOne. But their numbers, yes, their revenue has increased. Their operating profit hasn't really gone anywhere, right? So they did become profitable from an operating perspective. They probably had some sort of something that brought this out of here. But this company's been around for a long time as well. They've been public since April 2020, right? And you're still not operating profitable. Like, I feel like they had an opportunity to really take the game from CrowdStrike, or take a decent amount of game from CrowdStrike. CrowdStrike has $5.9 billion annualized, right? SentinelOne isn't even close to that. They're at $1 billion, less than $1 billion, right? So they don't need that much business from CrowdStrike during their outage they had last year to move the needle for them. But they weren't able to do it. They literally were not able to do it. In fact, their revenue decelerated. And that's not really something you want to see, especially when you have an opportunistic time to take more business from a competitor. And they were competing head to head for a little bit, but like, CrowdStrike is the leader when it comes to this space. So yeah, I am in Rubrik. I am bag holding Rubrik. I am resident bag holder for Rubrik, but I've been in Rubrik since $31. So it's not as bad. If you were buying the $100 range chasing it, then you got your face served to you on a platter, unfortunately. But that's why you don't really chase parabolic all-time highs in that case. Like, let's look at some other charts today to see how other things perform, and then I'm going to have to close this one out. If we look at, let's see here, we look at the fintech. Let's see if fintech had some recovery follow through today, because yesterday fintech was actually up a decent amount. And D-Local's doing pretty good. Coinbase, because Bitcoin went up. Shift4 flat in the day. Let me go to the daily chart over here. Still falling off a cliff over here. Mercado Libre flat in the day. Nubank up pretty decently today, but it's probably got that LATAM exposure, which does it pretty well there. This is something pretty interesting. How C Limited is still down here, considering the progress of emerging markets performance throughout the entire year. If I go to the EEM ETF, which is the emerging markets ETF, this one is basically up and to the right for the last year. But if I look at emerging markets growth stocks, not so much the same story. Obviously, I don't need to. Grab is actually up here. Yeah, Grab is basically down to the right, unfortunately. So, there's a few things that are not working. There are a few things that are working. And I think that we need to keep an eye on what's working right now, so that way you don't go too heavy trying to call the bottom on things that are not working, because things could not work for a long time. So just a word of caution. If you're a fan of some of these stocks, then just DCA into it. There's really no rush in doing it. All right. So, I would send you a link, but I'm about to hop off here in a few minutes. So I don't think I can, Evan. Maybe next time. But yeah, so I think that about does it for today. Just wanted to cover the market close for a little bit. Amit's probably back next week. Probably gonna have another Basis Points interview. So be sure to check out that one. And yeah, shout out to the crew, man. Shout out to the Wolf crew. Shout out to Amit's crew as well. I think Steve is going to be having a podcast tonight with Tanner, and I forgot who the third gentleman was, but they're probably going to be talking Lemonade. Won't be able to join that one, so we will see. But yeah, guys, take care. Have a good weekend. As far as the market goes today, I don't really go over thoughts on the market. So when it comes to the market, this definitely is looking a lot better than where it looked before. We're back over here above the 9 EMA on the daily for the Qs. Look at this massive engulfing channel here, right? If we go back to the weekly, we recovered the 21 EMA on the weekly, right? So we're recovering some bullish trend over here, right? Ideally, you want to stay above these, but like it's not always going to be the case. If you look back at the weekly chart for the Qs ever since April, we've basically been bouncing and using the 9 EMA support, 21 EMA support. So maybe we're finding ourselves in support here again. Maybe we're going to continue higher. We obviously have NVIDIA earnings on Wednesday, so it's definitely going to move the Qs. It's definitely going to move the stock market. But SPY we're back to being bullish. There's a little bit of a scare this week, but we're back to being bullish. So I don't feel the need to have hedges on anymore. In fact, I closed my hedges for a small loss and continue to ride the long portfolio. And I mean, I'm going to keep on playing this tune until things really change. But for now, I don't know. There's nothing to be extremely bearish about. Like if we close this week under the 21 EMA on SPY, that would be something to worry about. But we have bottomed earlier this week, had a little bit of a scare this morning, and I'm pretty sure a lot of people sold stuff this morning. Not you guys, probably a lot of big money sold stuff this morning and ripped it back up. So you had short covering all day. And today was obviously a whipsaw. You had the tariff decision from the Supreme Court, which clearly they did deem the tariffs illegal. And Trump came on the podium. He was just like, I'm not going to stop the tariffs. I'll figure out a way. And on top of that, I'm going to put 10% tariffs for $5. So they're not going away anytime soon. Bull trap or trapping retail. You know, I don't have hedges anymore. I got rid of my hedges this morning at a small loss. I know this afternoon at a small loss. So yeah, but yeah, guys, if you're checking me out on the channel, go ahead and like and subscribe to the channel. I'm probably going to release some more stuff over the weekend. Shout out to everyone, whether you're on the Wolf channel, whether you're on my channel as well. We're going to be doing some dual streaming on here, so you can check out either one. Probably going to put together a video as far as the Lemonade earnings, since I wasn't able to talk about it with Tariffs before. But Lemonade did not have a great last couple of days of its earnings. It's some massive sell-off close today, right in the 200-day moving average. So they need to defend this 200-day moving average to stay bullish. Like I said before, I sold out a Lemonade at $75 around here and looked good for a minute. I was a little bit worried. I was like, oh, wow, did I sell too soon? But I mean, you know, have patience. That's all it is. Life Med, I don't know what's happened to this company. I think I rode this up a little bit and then sold it, but hopefully you're not in that. If you're a big fan of the EOS, you know, then this would be your opportunity to kind of set a stop over here below the 200-day moving average if you want to kind of trade this to the upside. But yeah, guys, a lot of charts are not looking great right now. ASTS is closed at the 100-day, so it needs to defend that one. Rocket Lab, probably the same thing, needs to stay above the 100-day. But yeah, I mean, I think mega caps are recovering, which is good. Amazon's back above 210. All right, guys, so take care. Thank you for tuning in. Subscribe and like to this channel. Really appreciate you tuning into here. Talk to you guys later.